Welcome back, guys. Good morning. It's a good evening. Yeah. It's good evening from Nigerian time. This is 10:35. Okay, it's almost the end of the day in Nigerian time. Like if you are trading with Nigerian time, yeah, the market closed by 11 and opened by what 12. Okay, it's closed by 11 every day. So this is 10:35. And I use the Nigerian closing time to record like to as my basic recording time, but that does not mean that the market actually closed by 11. Okay, this is a very critical concept. I will take my time to explain. Right, so the market close, there is New York open and New York close. Right, so the New York uh open at close at 12 New York local time, which is 12 midnight New York local time. But in Nigerian time, that is 11 p.m. Nigerian time. So, and it is um 4 p.m. Or 4 sorry, it is 5 p.m. Nigerian 5 a.m. Nigerian time. That is the if you want to compare the New York local time and the Nigerian local time opening price, the opening price, which is also the closing price in New York local time, right? The market closed by that time and open, right? So the closing time in Nigerian local time is by 5 a.m., right? In New York local time, if you want to relate it with Nigerian time, well, I bet you need to go, if you don't understand this concept, you need to go deeper, look at your chart. All you have to do is to change your chart setting. The time is to change it to New York local time, and you still have this same particular candle shown to you every day. So that is it basically, and I have come with the February 2024 contract, which is the Monday, and it's a new week. I hope you all enjoying your day. So I will say this: I'm so sorry for delaying the weekly market review. I didn't even post it on time, so it is kind of very I don't know, but I when I created that video yesterday, I was really tired because I go through a long journey, and I was really tired, so I just slept off. I didn't even copy the link to post and all that, to share with my with you guys, that are very close, and maybe some of you that make use of it. I definitely know that if I post every day, there are there are particular five significant people that are very constant with my post. So, and even if it is only one person, I want to make sure that I do give them the best. And whenever I did not do what I'm supposed to do in time, I tend to apologize for that, because it's very not good for someone to open you and you disappoint them. And also, please try to learn this yourself. Okay, I'm not trying to be doing this so you stick to me every fucking day, right? Just get what you need to get, then start developing your own ideas. Start working on your own self as well. So I'm not doing this for you to get attached or anything, but I love it that you're watching my content, but at the same time, I'm going to be real with you and tell you the way forward. That is me. Okay, because right now I'm not making money from this content, but I enjoy doing it. That is it. And I want to give you guys the best. All right. So the Euro US dollar daily contract for Monday, 12 February 2024 delivered perfectly as call out yesterday. It priced into the weekly fair value gap or CB and rallied lower, sweeping below the Friday candle low, which is the sell side liquidity for Friday. Meaning we priced into this particular candle I showed you guys yesterday on the weekly review. If you did not watch that, go and watch it. And I was pointing out to you guys that this particular blue line is the weekly fair value gap. So we tap on it and we rally lower, like that is we go into it and we rally lower, and we take out the Friday sell side liquidity. So I am very pleased to see Euro delivered bearish after tapping on the weekly fair value gap or CB. This indicates and set This indicates an institutional order flow entry drill and also set the leg for the weekly sell side delivery. Now, meaning that if price did not get over here in any of this week and we start, price continue going lower, this is a very significant is very significant to say that this is an institution. Yeah, that's an example of an institutional flow entry drill. Then casting forward, if tomorrow candle led to a formation of a daily swing high, that implies a complete model for a sell side liquidity delivery. Meaning that if tomorrow candle did not take out this particular day high, maybe we trade highest we could trade into this blue line, then we started going lower. So if it definitely happened like that, that means that set the leg for a new swing high on the daily, and a new swing high on the daily indicates the whole week is going to be on that particular direction, which is sell side liquidity. Now, also today is an outsider day candle taking both previous week Friday high and low. Now, this still leads left an odd thought until tomorrow complete the program, meaning that today is an outsider day candle because you can see this candle take out both this Friday high and this Friday low, right? And it left me with an odd thought until tomorrow. So in tomorrow delivery, if tomorrow did not go price above this high, then I am very very in at point, okay, or we are very, very at point. So my daily draw on liquidity is sell side liquidity plus inefficiency. That means I'm going tomorrow to look for sell program, not long. Okay. So any short time long opportunity, I will neglect it. And that is how I definitely do most of these days when I call to you guys where my draw on liquidity is and what I'm looking out for. I tend to neglect any long opportunity because there is also every intraday long opportunity. But if you are bearish, those long opportunity might not be that effective, and to find something that will support it will be very hard. Then also I want to bring it to your notice that we have the COP CPI news tomorrow. So CPI is a very very influential news. So we have the CPI news by tomorrow by 2:30 Nigerian local time, which is also 8:30 uh, New York local time. That is it basically. So let's go to the 4 hour, the daily contract on. Let's go to the daily contract on the XY. So this is the daily contract on the XY, and as we can see, well, we have 60 minutes left for today to close, which is based on Nigerian time. So as we can see, we did deliver into that weekly fair value gap also on the XY, and we immediately we tap into it, we rally back, and we ended up bullish today into the candle. And that is very, very amazing. And also, we did not get into the breaker, but when we go on the lower time frame, I'm going to show you some very interesting areas on the XY that it might lead to a lower a higher in euro if the XY is willing to go to that area, or that will give us a divergence, which is smart SMT divergent between the dollar and the euro if we continue going higher, right? So that is it basically. And I will go to the 4 hourly contract on euro US dollar right now. So we can explain that. And also to add to this, I'm looking for buy side liquidity on DXY. And I will still add, I don't use, in case this is the first time you are watching my video, I don't use I don't trade the XY. I only use it as an indicator for my euro trade. Okay, so that is it. So this is my euro trade. We go to the 4 hour. So this is basically the 4 hour euro US dollar contract, 4 hourly contract, and I have this statement here. The euro US dollar 4 hourly contract shows nicely the efficient price delivery in today range. Now on the 4 hour, we can see how effective the 4 hour ICT fair value gap or CB hold price and act as a resistance for today price delivery. Now, I am anticipating for today to be the high of the week if price remain below the fair value gap or CB, meaning that with the price delivery of today, we this fair value gap I called it out yes on Friday, even on Thursday last week I called it out, and yesterday on Friday I called it out, and even yesterday I still mentioned this particular fair value gap, and we can see we tap on it, although we wick above it, which is very, very permissible, because the wick did the destruction and the body on state on that, let me say the body underlined the right statement behind the scenario. And also, when we price into it, we rally lower, which is the candle that actually give us a decent sell program for that day. Also, we can see that there is a formation of 4 hour ICT bearish order block that was formed in today price that has been tapped already, and also the line we and also in line with the new fair hourly fair value gap or CB that is also formed in today price. Meaning, what I mean by that is that we have a fair value gap, right? I didn't put that fair value gap because we it's already in line with the order block, and we can see how price respect this order block, right? We the body of the order block, the body states this, make the statement, and the wick do the damages. Although yes, that is why if you are trading any PDRA, you need to provide room for all this week, and you need to understand what the body of the candle is saying, then you neglect whatever the week or this week are doing, but also they are very important as well to price. Yeah, that is it. Everybody has its own role to play in price. All right, so that's it basically. And I'll continue. The 1 o'clock a.m. New York local time 4 hourly candle, um 4 hourly down close candle set the leg for the decent lower price delivery on euro in today trading after sweeping a short time high and tapping on the 4 hourly fair value gap or CB. Meaning that when we tap this particular candle, which is 1 o'clock a.m. 4 hourly candle, it give us the proper sell program in today price, and it also happened after tapping after sweeping above this particular swing high, which is this candle. The higher of this candle is lower than this, and also this one is lower than this, which is a swing high, and this particular candle swept that swing high and deliver lower prices, and this is a bearish order block, which is the down close candle that was formed before the move, and also it led to the formation of what the bearish a fair value gap, which is a CB. So we get to that bearish order block, and price is still holding that area currently. So my 4 hourly draw on liquidity is bearish, which is sell side delivery. All right. Let's go to the XY. So basically, this is the XY 4 hourly contract, and as we can see, the XY did not really do much today, and we have a weekly opening imbalance, but due to the how it is, I think this is because I'm not a verified member on TradingView. That is why this particular candle is not a perfect one. If it's a perfect Now, why I did not indicate it that is that if it is a perfect volume imbalance, this is how it's supposed to be. Something like this. This is a volume imbalance. It's supposed to be like this, but not like this. All right. So I believe this is a glitch because I'm not a paid member, and well, I tried to pay the other time, but I couldn't, and I'm still struggling with that. But I still make use of it, and it's still effective for me because I know what I'm looking out for, and I also have my MT5 candle. I After doing all this video, I also compare to it with my MT5 candle, MT5, and I saw the candles and I read out, still try to understand what the MT5 is telling me. So now on the 4 hourly, we can see that on the 4 hourly we can see that we did deliver a little bit higher, but we didn't take out this buy side liquidity. It forms a relative equal high, which is a buy side liquidity that we want to see market take out tomorrow. So and also we tap we definitely on a specific range in price on the XY 4 hourly candle. So that is it. And this is why I also state that if we definitely see the XY price lower and want to tap on this bullish breaker, then we will have to neglect what we already stated on the XY, because the XY will definitely go higher to taps on that daily order block or the daily fair value gap, which is 4 hourly inversion fair value gap. So that is it basically, and that is how they are correlated. And if this did not go lower and continue going higher, that also state that there is a smart money divergence between the XY and Euro. Um, my time is always almost against me. So let's go to the 1 hour contract on Euro. This is the hourly contract on Euro US dollar, and I have a statement here. The Euro US dollar hourly contract shows nicely the intraday price delivery on Euro for Monday, 12 February 2024. The daily profile is an obvious 2 o'clock a.m. New York local time as the high of the day that swept the midnight swing high, which is a buy side liquidity, and tap on the 4 hourly fair value gap or CB, which gives a decent sell program and and provide the highest expansion on today trading range, meaning that this particular 2 o'clock a.m. candle take out this swing high and also price into this 4 hourly fair value gap, which will lead to a decent sell program, and which is the highest expansion in today trading. Then the low of the day is formed at 10 o'clock a.m. New York local time that swept the relative equal low, which is the sell side liquidity, and begin pricing higher. That is a retracement higher to fill in some of the inefficiency formed during the London session, meaning that to the low of the day is this particular candle after sweeping these relative equal lows and pricing lower. It also lead the leg higher in price, filling all inside this inefficiency form in today price. And now that is it. Casting forward, I am anticipating for the newly hourly swing high to be swept before or during the CPI data to help engineer a perfect sell side delivery. What I'm trying to state that if we in the during before 8 o'clock a.m. we saw price trying to rally a little bit higher, then we might use this as a sell side liquidity for the market, as a buy side liquidity on Euro for the market to attack before we see a rally lower in price, right? Or during or before the CPI. And basically, you can take this particular scenario as a trade setup. Oh, that's on you. I didn't help you to click that button, but this is just a particularly nice setup that I definitely love to see happen in price tomorrow. So let's go to the XY. So this is the XY daily contract, and what I'm actually expecting on Euro is same thing that is happening on the XY. We have a swing low here. The XY might not take this swing low, or it will take that swing low. Now, if we swap this swing low, then I will it will help me, trust my bias of higher price on the XY. So we swap it, we take that sell side delivery, then we started going higher. Well, I don't want to see this taken. Then if this low is taken, then that is there is a higher probability of the XY coming to this hourly bullish breaker. So we have buy side liquidity to look out for on DXY tomorrow against ahead of the CPI data. So that is it basically, and I hope this video, this video did you did enjoy this video. And if you do, please subscribe to this channel, follow me, and follow, comment, give me a comment and a like on this video. Thank you, and thanks for watching. See you tomorrow. Good night.